Hi and welcome to Miss Riley's Maths videos. What I'm working through here is a quick income tax test that I gave to my second years today, and I'm going to work it through the solution. So form 2, hopefully you're looking at this if you didn't do too well on the test, and I've messaged you on Teams. So I'm going to explain what I'm doing and I'm going to show you how you can lay it out to make sure that you might do better next time. And then at the end I'll give you a question to try yourself and see how you get on. Okay, so Bart Simpson has an annual salary of €56,000, so that's important. So his gross annual salary is 56,000, and his standard rate cutoff point is 32,400. So standard rate cutoff is 32,400. His tax credit is 2,700. The standard tax equals 20% and the higher tax equals 40%. Now the reason I'm putting it over here to the side is because I want to show you a way to lay out your work if you're struggling with this, okay, or even if you're not, it's quite a handy way. So what I like to do is I like to represent the whole gross salary by a box. That whole gross salary for Bart Simpson is €56,000. Now they're going to tax that, and they're going to tax it, part of it at 20% and part of it at 40%. Standard tax is 20%, so some of it's going to be at 20%, 20% of, and the amount that's going to be at 20% is this amount here, 32,400. Okay, and the amount that's higher is 40%, that's the rate of. Now, this is the number we need to work out. We're going to work this out before we work out any percentages, because otherwise we might get confused. This amount here is what's left, what I put with this to make up this. So this number and this number should add to give 56,000. In other words, it's the difference between 32,400 and 56,000. So I'm going to subtract those numbers. 32,400, put an extra 0 there. I'm going to subtract those numbers, and that gives me 0, 0, 6, 5 minus 3 is 2, and 5 minus 3 is 2, 23,600. So he's going to pay higher rate of tax on 23,600. Now, do you notice here these two numbers add up together to give 56,000, because that's how I just got them. Okay, they add up together to give the annual salary. So when you're working out tax and there's two rates of tax, one is going to be standard tax, which is 20%, and is up to the amount of the cutoff point. You know, if you go on roller coasters, they say the cutoff height is 1.6 meters. Now what it means is above 1.6 meters you can go on it rather than below. But you know what I mean? That's what a cutoff point is. It divides numbers into two amounts. So the standard rate cutoff point is 32,400. So 20%, your standard tax is going to be 20% of 32,400, or 0.2 times 32400, which is 6,480. That's the standard tax. The higher tax is this amount. By higher tax we mean it's the tax on the higher part of his income, the bit that's above the standard rate cutoff point. So it's 20, no, it's not 20%, is it? It's 40% is the higher rate. So 40% of 23,600, or 0.4 times 23600, which is 9440. Okay, 9440. You don't have to do both of these, obviously. You do one or the other. You do either this method here, 20%, and get your standard tax, and do 40% here and get your higher tax, or you can do it with the multiplier, either. So the gross tax is equal to the standard tax plus the higher tax. So it's going to be equal to 6480 plus 9440, which equals to 15920. 6480 9440 15920. His gross tax, before we do anything else, is 15,920 euro. That's his gross tax, 15,920. Notice I'm not doing anything with the tax credit at the minute. I'm just leaving it like that because that's what I was asked to find. Now the second part, find Bart's take-home pay for the year. Well, let's see, he started with 56,000. That was his salary. Okay, but he's giving tax, at present, he's giving tax of 15,920. So one way to do it is to say 56,000 minus 15,920, which would be what? 40,080. Is that right? I'm just going to check it on the calculator. 56,000 minus 15920. Yeah, 40,080 euro. 40,080 euros. Sorry, it's late. I'm tired. Okay, now that's how much. So he's going to give that amount. There's his hair. Okay, he's going to give that amount to the taxman. He's going to give 15,920 to the taxman or the taxwoman. That's his gross tax. But remember, the taxwoman gives back to him his tax credit. So this is what he's got after giving the tax to the woman, the taxwoman, but she gives back to him his tax credit. So she gives back to him 2,700. So actually his take-home pay is this amount, the tax plus the tax credit, because they're giving the tax credit to him. It's money he gets to keep, 2,700. So actually his take-home pay is 42,780. Okay, that's the tax credit. Now that's one way of doing it. So do you notice there what I did was the gross tax subtracted from the gross salary. I worked that out and then I added on the tax credit, and that gives me the take home pay. Take home pay. Now there is another way I can do it. I'm still going to get the same answer. Take home pay is 42,780. What I can do another way, or I can take the gross tax, which is 15,920, and I can take away the tax credit. So minus the tax credit 2,700 to 13,220, and that is called the tax due or the tax payable. If something's due, it means it has to be paid. Okay, tax payable, tax due. This is the actual amount of tax that Bart's paying. So what's his take-home pay? Well, he's actually paying 13,220. He started off with 56,000. He's paying 13,220 tax payable. So his take-home pay is the difference between those two. And we'll find it's the same amount, 56,000 minus 13,220, 42,780 euro. So do you notice I'm getting the same answer? I'm just doing it a different way. That's his take-home pay. Now, what I'm going to do is I'm going to set another question on the other side of this here. Okay, so let's take Lisa Simpson this time. So Lisa Simpson, let's say she has a gross salary of €72,000 because she works harder than Bart, doesn't she? Okay, let's say the standard rate cutoff point is 35,000. Let's say the standard tax is 20%, the higher tax is 40%, and her tax credits are 3,800. Okay, so I want you to calculate. Okay, I want you to calculate 1, the gross tax, 2, the tax payable, and 3, the take-home pay. So pause the video now, okay, and see how you get on with that, and then I'm going to work it through again in a moment and you can see whether you get it right. So pause it and give it a go first. Okay, I'm going to go through it now. So what do we have? Her gross salary. Let's draw our little picture. Her gross salary is €72,000. Her standard rate cutoff point is €35,000. So that means 35,000 for the standard tax at 20%. So 20% of 35,000 standard tax. Higher tax then is going to be 40%, and it's going to be 72,000 minus this, because I've got to know what else do I have to add on to 35,000 to get 72,000. I need 37,000. Now I just realized I've written this different than the other side. So when I say 35,000 at 20%, what I mean is it's the same as 20% of 35,000. Okay, which means 20 over 100 times 35,000. Okay, so let's work out the standard tax. The standard tax equals 20% times 35,000, which is €7,000, because it's a fifth, isn't it? And the higher tax is 40% of 37,000, which I think is 1448, but I better work it out. 37,000 equals 14800. Okay, now of course the other way of doing that, remember, is that 20% is the same as 0.2, so you get still get 7,000, and 40% is the same as 0.4. You still get that amount. Okay, so the gross tax, which was the first part of our question, is going to be the standard plus the higher. So 7,000 plus 14,800, so 21,800. Okay, that's the gross tax. The second part of the question says to find the tax payable. So the tax payable is the gross tax minus the tax credit. So that's going to be 21,800 minus the tax credit of 3,800. So that's 18,000. So the tax payable is 18,000. That, remember, was in the question. That information was in the question, the tax credit. And finally, part 3, the take-home pay is going to be the gross salary minus the tax payable. So 72,000 minus 18,000, which is 54,000. So Lisa brings home 54,000 in money each month from her salary after paying all her taxes. Okay, I hope that helps. See you tomorrow. Bye bye.